me lower this. Okay. Is this lowered too? What the Come on. Wake him up, Yaya. Wake him up. All right. I mean, we've seen him dead in pullbacks before. You know, it's not that uncommon. 2022 many a times, but it's just frustrating. What's up, Khalib? Stavro! You got it. All right. So I assume, can you guys, Mario, the screen's good? The thing's working good. Thank you. All right, let me just get some coffees and stuff out of the way before I'm not sharing my screen. Why is that? Hold on. Oh, what happened here? No. What's going on here? I didn't touch anything. Share screen.
Council CCI reporting results in the last few minutes, announcing a $3 billion buyback to Charlie, India.
Is that better? Working now? It should be working now.
Fiber segment 2.
Hola. Good to hear, Mr. Stavro. All right. I think I posted a few things. Kind of just wanted to touch on. I don't want to. Into these pullbacks, I like to look at a lot of things. I don't want to bombard you guys with too much shit, just to get the gist of stuff. All right. So let's talk about. Is it the 415? 415, right? Yeah. So let's get started here. Let's talk about the market before we dive into the signals, which are obviously more important than what we feel and what bias we may have. But I think it's important to understand how we came into this correction, so we get a general idea of why you need to see certain things before we can get excited, right? Because what I mean by that is a lot of times I get the question like, is there a certain level? And not being a technician, there's not really any specific level for a pullback I'm looking for. It's how positioning, sentiment, and all that stuff shakes out, and then kind of to Yaya, what he was mentioning off the start here. Once sentiment positioning does get to a place where you're now off sides on the complete other side, right? You want confirmation from the sweeper activity. That's confirmation from kind of, again, it's an overused term, but quote unquote, the smarter money out there, right? The professional money. Because what happens is you can get to a washed out state in the market based off internals, breadth, sentiment, positioning, and that can linger a bit, right? The sweeper activity, where that's really played a big part for me, is kind of the timing mechanism behind things, right? And even more importantly, I think coming out of corrections, what a rally may look like, right? Because like you're hearing a lot of stuff out there right now. You're hearing, oh, this is just a shakeout of overcrowded momentum names. It's a growth scare. There's a recession coming, right? And I think the clues out of the price action and the sweeper activity is what's going to provide us an idea of how this all may be shaking out, How are things evolving? So that's where it plays an important role, right? So that being said, I think we're on a short-term basis, no doubt. We are at a place where we should have seen a squeeze by now, right? There's enough over the last few days where we normally would see under normal backdrop a snapback rally of some sort, right? A decent enough short squeeze. Um, I think one of the issues that we're dealing with here, and the issue I'm aware of, there could be some obviously behind the scenes thing the market's pricing in, but you guys see it in front of you. You go on social media, and I gotta stop going on social media because it really affects my bias in a negative way a lot of times when it comes to playing this game, because I see the riffraff getting excited. I see Ferrari steering wheel dudes calling bottoms, and it throws me all out of whack. So I gotta avoid going on social media because it really gets in my head. But you see enough out there now where on Twitter, on CNBC or Bloomberg, there's enough people calling for a tradable low, a squeeze. A lot of people really sticking out their neck voluntarily to try to call for a tradable low. Like it's an easy thing to catch. And again, in a bull market, when you get dips, the tradable lows are easy. Okay. But when you get into a legit correction, and that's why I think so much good comes out of a legit correction, is because that stuff doesn't work anymore. And the people who thought it was easy end up losing all their money and get washed out, right? That's the beauty of corrections. So what we have been seeing over the course of probably the last week now is enough people out there calling for some sort of tradable bottom. Okay. And that makes it difficult to see, right? That tradable bottom. Okay. And on top of that, like we were having this discussion in the steam room, think about where we came into this pullback. Okay. Guys like me who were in a high cash position, I wanted to pull back. Bears wanted to pull back. And I think this is really the telling part. Even bulls that were holding positions, right? And they've made enough money and they're holding profitable positions, they even wanted to pull back without trimming much of their exposure. So in other words, they were willing to take the short-term lump and have the benefit of a pullback, cheaper prices, so they can add. Right? Think about that bias and that sentiment. Right? Talk about complacency. So you got to get to a point where it kind of you scramble that, right? The market scrambles that, where people start second guessing, not only tradable lows, but second guessing whether they want to hold much of any of that long exposure they're taking a bath on. And trust me, they've been taking a bath on a lot of those names we've been talking about that have been extremely crowded for quite a while. All right. So again, what I'm getting at is that's what I think we're dealing with here. That's visible to us. On top of, again, the stuff that is not visible, what the market may be pricing in that we're not totally aware of, right? Is the market concerned about a government shutdown? A lot of times that's just noise. You hear everybody talking about, the government shutdown is just noise, right? The market always gets a little jittery and it never pans out to anything. Maybe this go around, it's concerned about it, right? We don't know. Is the market truly pricing in some sort of legit slowdown in where not only are you got to take the re-rating stocks taking multiples down, but they're unsure of the E part of that ratio as well, right? So you're taking multiples down. Where are earnings? Earnings haven't come down much at all yet, right? Analysts haven't taken down their numbers yet. So that's a process, right? That's a process. And I wanted to start off with that because I think without getting more information from the confirmation side of the signals we pay attention to, you got to be patient. You got to be patient. And if you're itching to play for that tradable squeeze, kind of to Ranchero's point he made this afternoon before the close, play it, right? It's only one trade you're looking for anyway, right? Play it. Don't get crazy on it. Right? Give yourself a little wiggle room, just in case if you're early, because you're probably going to be. But if it doesn't pan out, you don't want to jeopardize, especially if you came into this correction in that shape, you don't want to jeopardize having the ammo when the dust officially settles and clears here, right? Again, that's the rainbow that's the gold at the end of the rainbow. It's not catching a tradable squeeze, a tradable low. Okay, to be honest, I look at that as trying to get me through a correction, right? Trying to catch intraday squeezes or rolling the dice, trying to catch an overnight trade for a squeeze. Ultimately, the way I look at those type of trades, that's just getting me to stay disciplined and patient to get through the bigger picture process. Okay? Because again, the gold at the end of the rainbow is once the market does what it needs to do and you get to that turn, okay, when the momentum starts to shift and now you have positioning on the other side of the fence, all sides, and they get caught, right? And you start seeing potentially new names or different sectors, different groups taking a leadership role. That's where you pick up the money. It's not catching these bear market squeezes. Don't get me wrong; they can be violent. They can be big moves. You see what the volatility is, right? You see how the volatility is. So they can be big moves, but they're not as easy as everybody makes them out to be. These tradable squeezes. The market is quick, and a lot of times the market has a tendency to overshoot. All right, so I wanted to start with that because I think that's where we're at. There's a lot of good from the damage from the water we've taken in on the boat already, right? From the damage we've seen as far as the internals, as far as air coming out of a lot of these crowded trades, these speculative trades, there's a ton of good that already has been done, okay? And I think now we're in the process, if you think of it as two halves, we are, in my opinion, going into now the second half of that process, right? Now we're waiting for that to finish up, and at the same time, we want to be ready and keep eyes on some of those confirmation signals. Again, not just on a market turn, okay? Because sometimes some of those clues and signals can come in while the market's still weak. But, what will have momentum when the market turns? What will it look like? We don't, right? Everyone just assumes the market is going to go back to the same exact market we had before this correction. That's not always the case. It's possible, but that's not always the case, right? If the market is truly pricing in a recession, you're likely going to see names that hold their own and benefit during recessionary times actually sustain leadership, right? They will be in a bull market. So these are the things we kind of want to pay attention to now as we get into the second half of this process, right? But if you're looking for that short-term snapback rally, in a sense, I think here, if we're not there already, we are really close enough to where if you were looking for that trade, you probably need to be looking to put it on. Okay, if you want to wait for even some sort of timing or confirmation, like that's kind of what I'm waiting on here for, even just a trade. I'm even looking for intraday, guys, because there's enough meat on the bone that intraday you can benefit from it, right? Depending on where you come in, is the market gapping up or is the market lower when it reverses? some trades may be more profitable than others. But even on an intraday basis, these moves are big enough to where you can benefit from them with a lot less risk by holding overnight. All right. So that's kind of how I'm looking at it. And again, I could just tell you, I don't tell anybody what to do. I shouldn't be telling anybody what to do. But what I'm looking for here is I'm looking to try to catch that turn on an intraday basis. And what I'm looking on the confirmation side is out of a few things, right? Let's talk about them. Yaya brought it up at the start. The sweeper activity. Okay. Again, big picture wise, I want to see what names they start accumulating during this downturn or when the momentum starts to turn, right? I want to see names that they're buying with decent size, some aggression behind it, and with some time behind it, right? I want to see them betting on names. Okay. That's ultimately the cream of the crop type of flow I'm looking for out of this, right? But as for catching that snapback squeeze, especially intraday, I don't need to see that action. Let them come after weeklies for all I care aggressively. But what I'm looking for is some sort of appetite behind the call buying, right? And when it shows up in these type of climates, it's going to stick out like a sore thumb. Like anybody who's in the steam room watching the flow now, you know exactly what I'm talking about. Like right now, the flow's been abysmal, right? It's been awful. Okay. And we've been talking about it's been pretty bad even before this market rolled over, in a sense, right? Very selective, isolated action, two-sided action in the active names, really no edge out there off the order flow. Okay. When they're playing for a squeeze, you're going to see that rapid fire Uzi type action, right? Boom, 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 where they hit a name 5, 6, 7 times in weeklies or monthlies, whatever it may be. That's what creates the momentum for these squeezes. All right. So ultimately, I want to see that, even if it doesn't show up at the lows. I don't need to be at the lows to benefit from that. Okay. But ultimately, I want to see that show up for me to get involved. Otherwise, the risk you can, like right now, let's say, right, or the past couple of days, you can get in even though internals and short-term sentiment measures are completely washed out. You can get in, but you get this buyer strike that we've been seeing, right? Where liquidity is really thin, and even though the selling is not aggressive, you get this drip fade off every rally, and you just keep trickling lower. Okay. And if that goes on for longer than it should, you get almost like a mini panic, like we were talking about. Again, think late 2018, right? During the holiday season, you had that buyer strike. The selling started to dry up. Some of the shorter term sentiment measures started flashing bullish, but no real aggressive buying surfaced at all. And you saw how that turned out, right? The overshoot there in late 2018. So that's where I think sweeper activity can be very helpful, right? Another thing, if let's say you're not relying on sweeper activity, is you want to see that puke. You want to see that, again, panic is an overused word, but you want to see some form of panic that usually can put in a nice tradable low. One of the areas to look for, right, to look at in order to pick up on that stuff would be simply those put to call volume ratios, right? A put to call. We elevated a bit more today, and you want to see a spike, right? Doesn't have to be a huge spike, but you want to see a decent spike in the put to call. Prior to today, we didn't have that. Today, I don't know what the closing numbers were, but you had some fear behind that put to call volume ratio. Okay. And again, not getting too wonky, but the last thing, and I think even on larger time frames, it's important. But you guys, we have talked about those credit market signals as confirmation, and they work extremely well, right? So you got like credit default swaps and credit spreads, okay, that we look at. The problem with trying a rally when these things aren't confirming some sort of relief is you're not going to get that risk on backdrop in equities while swaps and spreads are widening out. Okay, you can get these smaller rallies, right, in a sense, but they're not going to find much of any follow through to the upside if you got credit spreads and default swaps widening out. Okay, algos go on auto sell when these things happen. Okay, you're trying to swim upstream. And again, you see the correlation on these things. That's why we look at them so closely and we talk about them, right? So these are credit default swaps. Okay, and again, inverted, and you see the correlation. That's the S&P 500 on the top, right? And these are credit default swaps on the bottom here. Okay, if you're going to tell me that the markets are pricing in a slowdown, okay, if that's the problem here, and you're going to tell me that credit default swaps are going to widen out further than they are here, there's no way I'm interested in getting long. I don't care where sentiment is. Because, again, look at the correlation. In all likelihood, there's a very, very high probability if credit default swaps are going to widen out to here, where's the S&P 500 going to do? You understand? And again, a little less of correlation in credit spreads, but pretty much pretty close. Okay? And sometimes you get these divergence in credit spreads that you can pick up on, which we talk about. But here you can see again the correlation, right? Spreads roll over, the market has caught up to it. Now, if you're going to tell me spreads are going to widen out further over the next couple of weeks, right? There's no way I'm getting long equities. There's no way. Okay? So, intraday, if you have access to some of this stuff to keep an eye on it intraday, you can kind of get a gauge on what these things are doing on an intraday basis. Not 100% accurate, but close enough. All right, but those of you who are looking for like an end of day or overnight swing trade or anything like that, these update every night. You can definitely get access to that. And again, we talk about it in the Steam Room a lot, right? We talk about it in the Steam Room a lot. So you may not want to pay attention to this stuff in a correction, but you can understand how it can be a problem, right? If you're trying to catch a squeeze and these things are doing the total opposite. Okay? Now, if tomorrow morning, let's say the market's down, whatever, a lot, a little, and starts to rally back, and we're getting confirmation from the credit markets behind that rally, that's a trade that you probably want to get involved in if you're looking for a squeeze at this point. Okay, if it fails, it fails. But if you got credit confirming a shift in momentum and you're looking for kind of that snapback trade, that's exactly what we're looking for here. Right? That's exactly what we're looking for. Okay? Perfect example was today. I don't remember exactly what the market was doing, but the market was doing it, whatever it was doing early in the morning, and credit looked awful. Like completely awful. Right? So think about if you're not paying attention to that at all, and you're trying to catch a squeeze into that. Right? It's the total opposite of what I'm looking to do. Okay, so these are some of the things we pay attention to in the Steam Room as far as confirmation signals, on top of some of the other stuff we look at, on here on the webinar every week. All right, but these are some of the things I'm looking for to try to catch primarily an intraday squeeze, and then beyond that, on a larger time frame, ultimately some sort of bottom when flow shows up. All right. Now, getting to what a lot of people are looking at, a lot of different measures now. A week ago, 2 weeks ago, when you had everybody at the AAII survey, you just had the survey. Okay, that was the only thing bulls were hanging their hat on. Now you're at a point where you got a lot of different things now showing some extreme on a short-term basis. Right? So quickly, this is the Ridex funds. Okay, think about bullish and bearish funds. They rotate depending on the market. All right, when things look bullish, they go into bullish type funds. When it's bearish, they go into bearish type funds. When they do it at an extreme, it's usually around some sort of turning point, more than not. This is showing that they just recently here, I think yesterday, got aggressive on the bearish rotation side. Okay, so you got stuff like that there. Here, this is the NASDAQ daily sentiment. Same thing, right? Above in the positive zone is showing extremely bullish. Down here, extremely bearish sentiment. Yeah, probably you got room if you want to go lower, but you're in bearish territory here now. Okay, here are some of the other things that I eye on. This is from Sentiment Trader, right? Quote unquote smart money indicator. These are when a lot of the contrarian indicators that work well into pullbacks are signaling bullish. You get a high reading. Okay, when the contrarian indicators are selling, right? It would be on the red side there, as you can see. And here's another bullish reading. Okay, so you got enough of these things here. You got enough of these things. AAII. But here's one example I wanted to give to you guys, not to jump around. The survey thing we were talking about, right? Here's the updated survey. This looks like the apocalypse, right? This is basically just a survey. They're asking AAIA members, are you bullish, bearish, or neutral? Okay? Just a survey. But while they've been bearish, okay, and they certainly have been saying they're bearish, it's kind of like what we were talking about earlier about the correction. They are holding long exposure, but they want a pullback, right? When you look at positioning, okay, this is the same group, AAII members, but this is their actual portfolio positioning. So putting money where their mouth is. You can see completely different tune they're singing. Right? Completely different tune. According to the survey, you would think they'd be down here somewhere. Right? But these a lot of these survey indicators are things, even run-of-the-mill people who don't follow sentiment and positioning, they follow this stuff, right? The CNN fear greed, AAII, they work well in a bull trend and in pullbacks. But when you get into corrections, many times they fail. Many times they fail. All right? But just giving you guys an example of the AAII between the survey and actual positioning here. All right, what else we got here that I wanted to show you? Here's breadth and internals. Right, so a lot of times when we see some of these shorter term sentiment signals washed out, you want to wash down internals as well, because what that means is not only does the selling exhaust itself in a sense, but when that snapback rally shows up, there's a worthwhile kickback to it, right? There's a worthwhile snapback to it. And again, prior to a few days ago, this was not even all green. You had some stuff that was still flashing red, meaning that they weren't washed out. They were still coming out of overheated territory. But now you could see, right, especially some of the shorter term time frames, 10-day, 50-day, some RSI starting to show up. You got a lot more of washed down internals here. Okay, again, on a shorter term basis, right? On a shorter term basis. On a longer term basis, you want to see some of these longer time frames light up green. Yeah, it's just a quick view on breadth and internals between indexes and ETFs. What else do we look at on here? Oh, another thing, right? Big picture wise that we're keeping an eye on, many of you are familiar by now on these Sharpies, right? They've been net short for quite a bit now, okay? And usually when they remove those hedges is when a correction finally shows up. Okay, so we're looking now for an aggressive removal of hedges from Sharpies, and that's another again confirmation signal that the worst of it is probably over. What else do we look at here on the week? Oh, and hedge fund in single names. Right? So these guys got, I mean, it's unbelievable, right? Unbelievable. They actually got long in the first week of the pullback. The first week of the pullback, of this recent pullback. And they got caught now. All right? So they're still stuck at zero. I mean, they're getting killed in some of the crowded names. The long side of their book is blown up right now. Some of those names. Some of the bigger names holding up better. So inevitably what we would like to see is whoop, right? Okay, spit them up, puke them up, and now you got hedge funds caught aggressively short. All right. And the last but not the least, because I think it plays a big role, is that systematic fund crowd, right? Which you definitely see create a racket in the price action. They can the edge out of that information is not when they're long, you short the market. Okay, you think of them as trend followers. Okay, they're funds very systematically that follow trends. They try to catch trends. Okay, but when they get caught, right, after a lengthy one-sided trade, when they get caught with a full tank and there's an unwind of that trend, they systematically, there's no emotion there, right? So as the S&P 500 breaks levels to the downside, as VIX breaks levels to the upside, they are going to unload that long exposure. Okay, no questions asked. They're not like, oh, but maybe it's just a correction. Maybe I'll hold on to it. As the market breaks certain levels, they will take down exposure. Okay? And you see that obviously have an effect in the market. I mean, they were long for quite a while. They caught a nice trend. They benefited from a really nice trend on the upside. Okay? But what happened now is you got this market that has aggressively sold off here. And at the same time, they're unloading that exposure into that sell-off. Okay? It's extremely difficult, kind of to the credit spreads analogy. It's extremely difficult to try to make any headway on a bounce or any upside move while you have this systematic crowd selling into up, down, and sideways markets. Okay? The good thing is that's what they've been doing. And as they're doing that, they are now net short. All right? So they went from as long as they can be exposure-wise, they are now not long anymore. They are net short. Okay? They still have some selling possibly they can do. But the beauty is when they get to a max short position, if it ends up that way, you get the complete opposite, where now they are max short, they can't short anymore, and what they're more inclined to do now is buy in an up, down, or sideways tape, right? So it does the opposite of what we're seeing in the price action now. It helps create a bid. And as that momentum turns and they have to take those shorts off, that's when you get some nice velocity behind these bounces. Okay? So the good news on this front is that they are net short, so they don't have as much selling to do. But as Goldman's making the point here, if this market remains weak, right? If this market continues to do what we're seeing it do, they have room to get from short to max short. And obviously that's still some supply to hit the market. All right. So depending on how we look into next week, we'll be able to determine whether they're done selling for now or they're getting to a max short state. And then at that point, you're at a point when you get to that point, like think about it, right? You get hedge funds aggressively net short. You get systematic funds at max short, right? You get retail, they're done. They're playing the short side if they have any money left. Okay? That's where you find true bottoms. Even if the market still has trouble making any headway to the upside, right? Even if the market can't find momentum following through to the upside, kind of like we saw in 2022, it's still a decent market to look to add exposure if you're looking to do that into weakness. Right? And that's where you can feel good about buying stuff with time and stuff like that, if you're interested. All right. So, do I have a chart here on the things? Oh, here is hedge funds. I posted this even on Twitter. This is in those crowded names that we've been talking about. Right. So you have aggressive selling in these names. I mean, you look at the price action though. These things have been hit over the head. They've been hit over the head. But the problem in these names, guys, and you got to understand, right? Like we were saying, people with the first dip in those names, they were itching to buy dips. They were buying dips. Nvidia, off the DeepSeek news, had the highest amount of retail buying ever. So then when they get caught again, right, and they need to sell, they're puking into further weakness. So it's not an easy thing to determine in a lot of these names where does the selling stop when they've been so crowded into for such a lengthy period of time. Right? You hear people throw out levels. Oh, it's probably going to bounce here. It's probably going to go. All those levels, they go out the window. Right? You see Tesla crashing through levels to the downside. When people need to puke, you think they're not going to puke because of a level? Right? Margin calls. We'll probably hear a few even smaller funds blowing up because of being extended in these names, thinking they would never go down again. This is the same old tale in every market. Right? It's just a matter of when. It's just a matter of when. Okay? So here's the moral of the story, and I'll leave it at this. Right? I think if you're looking for that tactical trade, especially on an intraday basis, I think it's worth paying attention to, especially for some of those confirmation skills, right? Confirmation signals. I think we have enough damage to where we want to pay attention to try to catch some of those snapback moves. Okay. In general, even a panic in a sense to set off a turn there, but at the same time, that's not ultimately why a lot of you are in an elevated cash position, right? That's not why you want it to be in cash going into this cycle. Right? It's after all this is done, that's where you will reap the benefits of taking advantage of some of the things that have been hit over the head nicely. Right? Or even maybe that's not even where you get the biggest bang for your buck, right? Maybe there's a completely different type of market that comes out of this. Nobody knows. But that's ultimately, that's where you make the money once the dust settles. All right, so there's nothing wrong with trying to catch these short-term squeezes. I want to catch it too. But as you can see, It's not as easy as people make it out to be, especially when you still got a lot of people looking for it. I mean, I know more people that have called bottom over the past 2 weeks than fearful, right? Than are afraid of more downside. That's not good. And I think, this is wearing them out. This is like 2018. Let's take a peek quick because we use that as an example. Or two examples I want to show you that we were looking at in the STEAMROOM, just to put the things in perspective. Again, I'm not comparing to what we're going through in 2018. Obviously, it's a whole different game, but just so you get an idea of how things can shake out, right? So here's the 2018 here, and even though here, like this was even later in that correction, right? Because you had selling, and then it found the low, and you had some stability, and then this is where kind of you had this drip, 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 drip panic, right? But ultimately, what put an end to it in late 2018 was the Fed, right? So you had that catalyst. So you had washed out sentiment, you had washed out positioning, all those things we discussed just now, they were all lined up, all of them, right? Some of them there for a few days already. But ultimately, what stopped the bleeding was the Fed pivoting back then. Who knows? Maybe the market will need something like that this go around as well. That wouldn't shock any of us. Right? But everything was set up by the time the Fed pivot. And that's what set up such a beautiful move after that. 2023, right? You've heard me mention that a lot because that's the last time we've had anything that resembled a correction. Now, 2023 was a little bit different, okay? But look at the work it had to do before it got to where it needed to get to, okay? You had this sell-off here, probably less violent, right, than what we're dealing with now, okay? Then you had the snapback rally, okay? Then another rollover. Then again, some stability here in a snapback rally. And then one more pukage. And ultimately, by that point, you had all of the things set up that we talk about, right? At this point here, systematic funds are max short. At this point here, hedge funds are aggressively short. At this point here, retail has kicked the bucket. They've given up. Right? All that stuff is already there when the market actually bottoms. Okay, then you see some confirmation. Again, like in 2018, the Fed pivot, right? Powell pivoted, but then you start to see confirmation from the credit markets because Powell pivoted, right? The credit markets, the signals out of the credit market were a lot more risk on bullish because of that pivot, right? So you had a completely different tune there. Same thing with flow. There wasn't a buyer to be found. I remember like it was yesterday. That was during the holidays, late 2018, during Christmas. Nobody was even at their desk, let alone buying. Right? So you had this drip, 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 no buyers to be found. Then Powell pivoted, straightened out credit markets, and sweepers came back from sipping eggnog, aggressively buying calls. Yeah, Mnuchin, right? Calling the banks, making sure they had the liquidity, making sure they had enough liquidity. Right? So you have that like that mini panic. Right? Again, panic is an overused term, but you guys know what I mean. It's kind of what we talked about before this correction started. What you want ultimately from this pullback is for all those complacent bulls, okay, that irritated you so much. But all kidding aside, all those bulls that were so gun-ho on their thesis, whatever it was, AI, we got more to go, Trump, then there would be a down day again, good for Bitcoin, good for equities, right? They weren't thinking about any risk at all. They start to question that big picture thesis, right? That's ultimately what the corrections do. That's what they do, right? So, like we were saying before, before this correction took place, it ends up being like some sort of growth scare. And now, what are you hearing, right? It's being overused, that term, growth scare, right? So these complacent bulls, they start to second guess their thesis that was rock solid. And then when they start to really second guess that, you get them puking up all that excitement they've built up in long exposure prior. And I think that's the risk here, in my opinion, to not seeing, in other words, to playing a short-term bounce here, right? Like, I think you have a high probability scenario here where you see some stability in a turn, right? I don't know how much you're going to get as far as rebound, okay? But you got a high probability now here that there's some sort of bounce off the stuff we just looked at. I think the risk is that buyers don't show up, right? Whoever's playing that bounce, they panic, and you get that little panic puke. You get that panic puke. And the panic puke, from here, it's hard to tell, like, how much more damage does that panic puke look like? I don't, who knows? I don't know. I think the problem this go around, the big problem was the names that they were so crowded in, right, make up such a huge weighting in the indexes. So if you get panic even in just those names, it can weigh, it can have an impact on the indexes. It can have an impact on the indexes. Another scenario, too, that can certainly play out from here is that you don't get much of a short-term relief rally, and you start to see other groups and other names outperform. Okay? So the indexes remain choppy in a sense, okay? Because sellers are getting tired, but the buyers in the big names that make up the indexes aren't getting excited, but they're buying other stuff. And I know, to a lot of us, again, stock pickers who play names, that's not a bad scenario at all. But if you're playing for an index bounce, unfortunately, that's not what you're hoping for. But that's very possible, especially if they're pricing in, if this market is pricing in some sort of real slowdown or recession, you're probably going to see names that the playbook for a recession. Now, that's not just staples, but it could be, staples, defensive names, could be the software names, right? Software names, that's part of that recession playbook, software names. So it could be a variety of things. That's why I think it's better for us, right? If you're trying to catch the squeeze, great, nice and easy. Don't get too overly excited about it. Don't put too much energy or firepower behind it. I think it's more important to keep our eyes open to some of the more important clues that shake out of here. That's what we've been waiting for this for, That's what a lot of us have been waiting on with this. You don't want to blow it by, trying to catch an oversold bounce in a sense. In my opinion, it's not worth it. Like in 2022, and take it from a guy God honest truth, the end of the 22 bear market didn't treat me well. With all telling you guys about and preaching to you guys, all of them lined up. The 2022 turn still didn't treat me well because the buying was in names that I really didn't want to participate in. You know what I mean? I was waiting for action and names that I wanted to see, in a sense. But you had some pretty violent squeezes in 2022, right? Technically a bear market, and you had some squeezes. But even then, the point I'm making is I was stressing you don't want to put too much emphasis and weight on trying to catch these squeezes and risk not having any ammo to fire when that turn comes. No, that's not true. I like trash. Stop spreading rumors. But, that turn, for those of you, and the majority of you, who like playing calls and mega cap names, you guys know eventually what that turn looked like, right? If you had the bullets to fire going into 2023, you would have been in great shape instead of holding baggage, right? Instead of holding down positions that you're hoping come back. So you hear it a lot and it sounds corny, but you don't have to catch the low to benefit from a correction. Far from it. Far from it. You need to have the ammo to fire. That's all it comes down to. You need to have the ammo to fire. Ronchero. Watch your back, Ronchero. Yeah, and again, I'm not, it's not many people, nobody we know can figure it out. The market eventually will provide the clue. Like think of this 2022, okay? Coming out of the bear market in 2022, the last group, and this is kind of what the problem was, to my fault, but what are you going to do? The last group in the world that I thought would lead us out of the 22 bear market were the home builders. The last group, if you asked me to name a group and try to predict which group was going to lead us out of the bear market in 2022, the home building sector would have been the last guess I would have made. Okay? The last guess. And, it goes to show you, though, like, while everybody was talking about recession, they were talking about a real estate bubble bursting in commercial real estate, in housing, and all this bullshit. Okay? This is what the home building names, every single one of them, did coming out of this. Okay? So even just the price action provides clues like, whoa, how is there, you're telling me the real estate market's blowing up? And these things, they're outperforming while there's still selling going on. These things are going higher. Right? So you start to see these clues if you're paying attention to. Sometimes they show up in things you like. Sometimes they don't. Sometimes they don't. But look at this. Look at that move coming out of 2022. I don't know about you guys, but I never would have guessed it. Right? A higher for longer Fed, blah, blah. Everything you were hearing was the total opposite of what you would expect out of this sector to be bullish. The total opposite. Right? So the point I'm making is that the market could be pricing in something we're not even talking about. It could be factoring in something we have no knowledge of. No knowledge. We think it's tariffs. It's not solely tariffs. We know that because the market will look a lot different than names that are getting hit out there. right? We think it's crowded unwind. We know it has something to do with it, but it's not solely that, because names that aren't crowded are selling off. So we don't know. But the flow and the price action ultimately will provide enough clues to give you an idea of what may be shaking out. All right. So the point I'm making, I can't stress it anymore. I think it's one of the most important things is to not get too involved in the day-to-day up and down scalping. Oh my God, what was that program sell? Right? The day-to-day yo-yo shit that you're making yourself crazy over, trying to catch the squeeze, trying to short the rip. Okay? Again, I get it. The moves are great. It's worth playing if that's your game. I'm not saying don't play it. But what I'm saying is if you were in a decent cash position coming into this poll, that wasn't the reason why you were. Right? If you were hedged coming into this poll, that's not the primary reason why you were hedged. It's when and what the turn looks like when it's real, not these day-to-day gyrations. What they do, does it matter what they do? I mean, even if the stock is up, they'll sell it. Nice little pop. Probably be down tomorrow. Right? See you? Probably be red tomorrow. But yeah, and like that's and the beauty too is, and you guys say, God forbid, I'm telling you, listen, okay? Again, just a disclaimer, I get put into permabull camp a lot. Okay? Just to make sure everybody's aware of that. I don't want to get trolled. All right. I take it as a compliment, by the way. But recently I've been very cautious, as you guys know. So some of you guys were me in the perma cautious camp, or whatever the hell you guys were saying. But the perma bull in me has really got me, I wouldn't say excited, because I'm definitely not excited about anything, but it has me looking forward to the outcome of this. Right? Because you guys know, I feel like we really didn't see a true bull market. We saw a bull market in mega cap quality and AI names, right? You guys have heard me make that point a lot. And again, nothing to do with Trump, but if he gets what he wants out of this, I think the result is a true bull market, like a real bull market. New leadership, higher confidence. Like, think about it. We had a bull market with confidence at recession. It was basically, we were seeing recession numbers in a bull market. Right? We were seeing anything that has heavy economic ties in weight was trash. That was the worst type of stock you would go into. Right? Anything that relied on the economy for growth was the worst thing you could buy. So, like, if the end result of this is you get a cleansing and you cool off prices, rates are in check, and now you get the Fed back on your side again, you got the recipe for a true bull market. Yeah, the risk is it's a dangerous game. It's a dangerous game. You don't have a remote control. You don't have a remote control. It's not that easy to control things. I know they think they can, but when you're doing what you're doing, you risk that things get a bit too slippery and you go into a more dramatic of a slowdown than you were hoping for. And it's harder to come out of. But what I think is they're not concerned about that, man, because you'll get the Fed. You understand? Like, yeah, on a short term to intermediate term basis, maybe things get a little slippery than we like them. But ultimately, if they get more slippery, that means we got the Fed even sooner than we thought. You understand? Like, I think that's literally, you got to understand what Trump is. You understand? I know guys like Trump. I grew up with them on streets of Brooklyn and New York, all over the place. Right? Real estate guys, interest rates. That's the way he's looking at things. He's looking at it like you need to slow it down and then you could step on the gas. You can't, where Trump came in, at the stage he came in, he can't step on the gas there because inflation will go bonkers. Right? You need to slow it down. I mean, again, that's from listening to what's his face, the hedge fund guy who's running his secretary. What's his name again? Ben. I keep forgetting his name. Don't worry about it. I can't rack my brain. But listening to that Trump team and how they're explaining, the detox process and all that, I think, that looks like their plan. That looks like their plan. Yeah, that looks like their plan. So, again, where do you reap the fruits of that? Right? You don't, not in the intraday gyrations, not getting demolished on trying to catch a snapback rally and you're too early and now you get run over and you have a ton of weight on. Is having the ammo for whenever that turn comes to take advantage of it. Besson. Keep forgetting his name. That's an easy name to remember too. Yeah, again, you're looking at it like Trump inherited a good economy. I mean, you can listen. They're different. We can get political. I don't care. I don't want to get political. I don't want to put too much energy behind it anyway. You know what I mean? The point I'm making is where Trump came in, okay, he couldn't step on the gas from where he came in. Okay? By stepping on the gas where he took over, you would have inflation go out of control. You got eggs going parabolic. You got people making TikTok videos. They can't buy groceries anymore. Right? So, yeah, you got the stock market good at highs. Congratulations. You got a generation of people out there who can't afford to live their life every day. So, what are you going to do? You're going to step on the gas from that point? Right? And then prices really go out of control? So what, you got an even higher stock market, but now nobody can afford to live every day? Yeah, it's just, again, that's why you look at the internals of the economy. They was shit, right? Consumer confidence, all this stuff was in the shit house. The market's up. Congratulations. That doesn't benefit everybody out there. You got Bitcoin at 100,000. What do? Step on the gas, and now you got fart coins going to 30,000 too? You can't do it. You can't. He knows that. You can't do it. You got to let air out of the balloon, right? You got to let some air out of the balloon. It brings a little bit of pain with it, okay? But then once you let the air out, then you got some wiggle room to start juicing things up again. Yeah, it's just, again, I think the word they use is perfect. It's a detox, right? It's a detox. That's what it is. It's a detox. You're going to see it felt in a lot of different places. But I think if they get their way, and if it doesn't get a little too, if it doesn't overshoot to the downside, I think he's got a nice setup from there. And you hear Besson, what he said, right? He goes, listen, the stock market was up 20% last year, 20% plus, right? It was up 20% the year before that. If you don't have the cushion to do some of these things now, you'll never will, right? Like if people are complaining about a down stock market over a couple of months after a couple of years in a row of that, like what are we doing here? You know, it all comes down to the Fed, right? We know that when it comes to risk assets, it all comes down to the Fed. Yeah, that's another thing too. Like you talk about detox, the Fed and fiscal stimulus were two huge things over the last 2 years, right? And now both of those things you don't have. Both of those things. So you guys know me. I've been talking about this for a while. I think it's a much needed cleanse that we needed. However long it takes, even if it takes longer than a lot of us like, there'll be things to get involved in along the way. All right, but once the dust settles, and it will, it's just a matter of when. It's just a matter of when. That's where you pick up, you pick up the money. And listen, most of you, I would hope, over the last couple of years, made some money in this game. Not every day's a holiday. Okay, you can't treat every week and every month the same way. It doesn't work that way. Oh my God, Khalib, it's spoiled. I never seen so many people complaining about a market down 8%. Like you guys see that chart, Khalib? I don't know if you saw this. I posted. We were talking about this. I think it was you and I on one of the prior webinars. Look at this, right? Remember, I was talking to you guys about 1999, 2000, the late 90s. The corrections. Watch this. Hold on. I have it here somewhere, so hang on. It's over here somewhere. Come on. Otherwise, I'll go to my Twitter. It's worth looking at, though. I probably passed it now, right? Oh, no. Hold on. When was it? Sunday? Here it is. I knew I'd find it. You see that? Look at that. Okay? From 95 to 2000, right? The best bull market, strongest bull market ever. Okay? 800% in gains for the NASDAQ. What? Look at this. 10% correction, 14% correction, 14% correction, 15% correction, 18% correction, 23% correction, 11% correction. This is what I was talking to you guys about. The parabolic move. Look at this. 11%, 12%, 12%, 12%. In that one year. In that 1 year. No? Crazy. These things are healthy, normal, and needed. Right? And by the way, I think, did we get to 10% today? Oh, maybe on the NASDAQ we are. But we just got to the 10% threshold, I think. Can of corn. But more than likely, at the lows, people aren't going to feel like it's a can of corn. At the ultimate lows. So definitely got to block out the noise. All right. Again, that being said, flow wise, nothing really to talk about. There was some action, very little action. RKT. They actually bought some RKT before the Redfin buy, and so that's underwater a bit. That was over here somewhere. And then they've been adding some shorter term calls there, March and April here in RKT. This is kind of a rates play. Not kind of, it is a rates play. It's a mortgage name. There was insider buying on this guy too today, TREE. So interesting. Maybe they come out of this pullback. RKT again, they sees flow. One more active flow wise. So they did some buying there. Quite a few of the gold miners had some decent flow today. They were following the price of gold. Gold was the only thing that was seeing any buying really. You had a hell of a move in gold today. Look at that. So that bull continues. You had Newmont Mining had some flow. A couple days ago, this has been one of the stronger names, AEM. Look at this. From even where they were first buying gold, what was that, a year ago now? And then they played some of the more speculative names in the gold miners. A silver name like AG. $7 stock, $7 stock. But that's it. Today was, there was an energy name too. PR. PR. Okay, but overall, I don't really have any names to share with you guys as far as like accumulation. There's really not anything I could think of. Names like Freeport, they'll support into weakness. You had May and June call buying in this name. So they buy weakness in names like this. But I'm trying to think. When I tell you there's nothing that has got me excited over the past, what now, month or two, there's nothing that's got me excited. The larger names, here's what's going on in the larger names now. Okay, let's think of this right? Okay, you have here, okay, where call buying starts to heat up, right? And then as the stock moves, we talk about the rolling activity, right? It's not new buying. It's not all new buying. It's rolling. Players who bought at lower levels are rolling profitable positions. They pay themselves and they keep some exposure, okay? Eventually, especially things that get out of control like this, the rolling that's done up here is now so far out of the money that they start down if they want to keep exposure. You understand? So if somebody has Tesla January 500s that they rolled out to, they roll those down. The 500s, they roll down to the 350s. And we're seeing that a lot over the past week or so. All right? So you're seeing some size go off in these names, but they're rolled down. They're adjusting positions. So you really need to see these things kind of quiet down the action there. They are quieter than they were, but you need them to kind of consolidate a bit. Kind of what happened to Tesla here, right? You had a similar thing. I mean, it was more of a lengthy downtrend and all, but you get kind of a quiet time where no one's interested in the action. And then what I mean by that is you can see some of the action stand out. right? So if they come in and they go rapid fire and aggressively accumulate a position, that's kind of what you would be looking for. You want to see aggressive. At least me, I want to see aggressive accumulation in these things to have some sort of edge off the flow. I know a lot of you don't. You don't see that all the time. It's especially after they are cooked. So you're waiting around a long time before you see action like that. But you kind of would want to see Tesla bounce around here a little bit. Look like shit. People lose interest. And again, if you really, really like it, you want to see a couple sweeps come in and possibly start an entry. But if you're not sold on it and you rather see new names, you want to see some really aggressive action. You want to get forced into it. They do enough buying where you say, oh shit, somebody really likes Tesla. But so these names, that's where they're at in these names. Aside from that, there's no new action out there at all, and there hasn't been. Yeah, Stavro, there's been some flow in that too. There's the Freeport catches more action, FCX, but this one from time to time will catch a better looking bet, SECO. Okay, again, you probably are talking longer term. I think if you like these names, you got to hold your nose, buy them, right? Possibly even piece to them and leave them alone. Right? I think that's the approach there. Because they're tough. The problem with these names has been they're so economically sensitive, to China, to us, that a lot of times you need economic growth to see either that or a really accommodative Fed. Without it, you just don't get the excitement in the buying of these names. They're tough. Ideally, what we would want to see if you're an individual stock guy is you want to see some of that underbelly growth catch the new action, right? So I'll give you an example. Let's say we are going into a little bit of a slowdown, okay, based on this detox, and that's what the market's pricing in. It's very possible that at some point they start buying software stocks, okay, because that's the playbook for a slowdown, right? People forget the software stocks going into 2023 was the most crowded trade on the board. The semis were the most shorted trade in 2023, right? Because everybody thought a recession was coming. They were buying software. So if you do get a slowdown, and that's what the market pricing in, you could see some software, some of the software names, especially some of the newer names, see some good-looking buying. In that underbelly. So that's kind of where I'm hoping, some of the more sexier spots of the market, as opposed to this rotation, defensive rotation. I give an example. Like one thing I wanted to try to make a play on, I just couldn't get excited to do it, was, if you remember, we were talking about it on here, the staples. Going into the staples were washed out. They were shorted because the market was doing well. Everybody was bullish. So you had a nice set there. And if a growth scare showed up, you could see a decent run. But like, what are you buying? Procter & Gamble? Hey, what's up, Tobias? What's up, T? How do you distinguish aggressive accumulation from repeat buying? Yeah. That's a great question. Okay. It could be, repeat buying can be aggressive, right? So that's where a lot of times, you hear me talk about new buying, right? Okay. You got to understand, aggressive when aggressive buying, what it does, what the edge is of aggressive buying is it can generate momentum. All right. But when you're dealing with like Tesla, Microsoft, Meta, Nvidia, when these names are catching non-stop aggressive buying, like Nvidia was trading like crazy. Tesla trades like crazy. There's no aggressive buying that stands out at all. So you want to see a changing character. For me, like that's what I look for. So for an example, you remember the Intel action, T? Do you remember that Intel action that we saw recently that a few of us played? I think it was over here somewhere, right? So like what stood out there, Intel could catch flow. Intel, instead of like one or sweeps coming in and then some put sweeps, they came after it. Like one sweep came in, another sweep came in, then another sweep, then another sweep, then another sweep. That was the first round of Intel buying that we saw that looked like that in a while. It wasn't like it was trading like that every day. It wasn't like the stock was running and everybody's getting excited about it. The stock was dead, and then all of a sudden, you see this rapid fire buying show up. Right? That's my definition of aggressive. It's like the appetite. Somebody's showing an appetite. You understand? So think of it this way, T. The cream of the crop, right? To me, the best action that I could possibly hope for every day I turn on the screens is aggressive initial activity, right? A name that's just starting to catch sweeper activity that's aggressive. To me, that's the goods. Right? But to your point, you could have names that have seen buying already and they're just seeing more buying, right, at higher levels, and it's aggressive. Right? So like aggressive is appetite. That's, if I had to put it into like layman's terms, it's appetite. Okay, I'll give you another example. We're talking about like for a market squeeze here, T, right? That we want to see aggressive buying show up. Okay, what I mean by that is you don't want to see one Tesla sweep and you don't see any more, and then you see a put sweep a half hour later. You know what I mean? Like I call those isolated orders, right? Hit and run orders. They could be hedging shorts. We don't know what they're doing, one order, right? So the aggressive buying we want to see set off a squeeze here is we want to see that appetite, that bang that comes in. And it's pretty obvious to us that, okay, somebody's flipping a switch here, right? Somebody's hitting the buy button here for whatever reason. That's what I mean by aggressive buying. Okay, so the opposite of is what we have been seeing. What we've been seeing, again, just using the example here, okay, market sells off. We see put buyers, right? Put buyers mostly, okay? Then the market bottoms here. Okay, the put buying dries up. We're hoping to see aggressive call buying show up here, right? For a turn. That's what we're hoping to see. We don't see it. All right, what do we see? RKT catches a sweep. This $40,000 sweep. That $40,000, right? Isolated orders. No appetite. And then the market bounces. We still don't see we don't see the appetite coming into it, right? We don't see that aggressive action coming into the bounce. So that's kind of like a red flag in a sense, right? That they don't believe in the move. They're not excited about the move. So what we want to see is the market sells off, right? Put buying, or whatever. What the? Put buying, lack of call buying, and then bottoms here, and then all of a sudden a band, an appetite of call buying comes in. Right? They sweep Tesla weekly. Boom, 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 boom. 3-4 sweeps. Here comes a few NVIDIA sweeps. Boom, boom, boom. Couple SPY sweeps. Now they're sweeping XYZ, Snow, right? They start hitting things, that Uzi type of thing. And again, for intraday, for a squeeze, right? To catch a turn, I don't care if it's in weeklies. You understand? If I'm just looking for a squeeze, I'm just looking for aggressive buying to be the catalyst for it. Let them do it in weeklies, in 0DT. I don't care. I just want to see that appetite show up that's telling me, okay, they're showing an interest, right? They're showing an appetite there. And what usually happens is when that appetite shows up, when it's not been around, it continues, right? So you get aggressive buying start to stir up here, the market, right? It helps build some momentum, the market bounces. Okay? Then you get a little bit of a pause here. Now another band of buying comes in. Bing, 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 bing. Helps create some momentum. You understand? It starts to snowball. So that first sign of aggressive buying showing up is a sign of more buying starting to show up. That's the thinking behind it. But in layman's terms, aggressive buying is an appetite. You want to see an appetite for exposure. All right, so that's an example for intraday. On bigger picture, this stuff you want to build size positions in is accumulation, right? Aggressive buying and appetite with size and time, right? Again, that's the best type of action for that. So somebody comes in, they buy RKT June calls for $500,000. Oh, that's interesting. Okay, 10 minutes later, here comes another sweep, another $500,000, another $500,000. Stock pops off it creates momentum. Okay, next day they're back again, adding June exposure. Right, we see another June sweep. 2 days later, stock settles in, hasn't really gone too far. Boom, 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 they're coming in again. Right, that's aggressive. That's an appetite. That's a fund that is building a position in that name. They're making a bet on that name. We all wish they would come into the names we like at the right spot, Steve. But see, like for a name like that, T, and that's what I was trying to tell you, like the last time. For a name like this, okay, and a name you're eyeing, let's say, right? So you have an interest in this name to begin with, okay? This name doesn't catch a lot, right? We know it catches flow, but it doesn't. They don't bomb it. If they bombed it, the stock will be up 5 that day, right? So if it's at a spot you like and you see clean action, right? And again, I know you in the stock, so I'll make sure that you know it's clean. If you like the setup and you like the name, you wanna fire at that. You understand? Because you're using the flow as confirmation to what you see already, right? You like the name, you did the homework, you like the technicals. Now that sweeper activity, if it's legit, it's a legit bet. That's confirmation that possibly somebody else sees what you see. You know? See, me personally, I don't have that much faith in my handicapping skills. You understand what I'm saying? So the stuff I've done best in is stuff that I had no intentions of buying, but the flow forced me to buy it. You understand what I'm saying? It's not a name I was even thinking about really. It's just they came in and they couldn't get enough of it. That's usually where I do my best. Yeah, there's honestly there's nothing. Again, there's been just hit and run respectable sweeps. That's basically what it's been. That's basically what it's been. You know, and the other thing you got to understand too, right? And this is something we forget a lot too. A quick point. Sometimes you'll see a nice sweep, okay, and let's say XYZ, okay, and it's a respectable, clean bet, $1 million bet, all right. If that's the only thing we're seeing buying in, and we're seeing all put action and a lack of buying out there, you can't expect that name to buck the trend because it caught one nice sweep, right? Like that's not being realistic. You understand? Like example, you got credit swaps and spreads widening out, right? We're seeing much better looking and aggressive action on the put side than call side. But we happen to see one good looking order in a Tesla or whatever, right? The chances that that one name overpowers all those other forces at play just because you like it is, the odds aren't with you. Let's put it that way. Okay, and you guys will, and most of you know this, like Casey, you guys have been in the game long enough, but you guys realize that you do your best when everything lines up. No? Like usually that's where you fare your best. Where you got everything going in the direction you're playing, all the wind at your back, and you have a stock you actually like at a decent spot catching nice action. Right? That's where you're going to have your most conviction usually, and that's where you end up doing your best. More than not. The difficult trades, because a lot of this market is tough money. Like, yeah, you could try to make money. It's not like you're going to lose money every time, but it's tough money. I told you when, like in these climates, and it's just how long I've been in the game, I always have a tendency I'm trying to get back to even and I'm happy. Oh, I didn't lose any money. I'm happy. So what the hell am I even killing myself over? Why not just take it easy and wait? I can't wait. Like, that's the beauty of managing your own book. Like, if you're dealing with clients, I get it. Trust me, you can't wait. Okay? But if you're managing your own book, you're trading your own book, you don't have to answer to anybody. You understand? You can be as patient as you want. You don't have any quota to meet. You don't have anybody to answer to. And guys, okay, and for those of you who have been on these webinars, and obviously you guys in the Steam Room, we've talked about it more than enough, all right? You're going to realize one way or the other, right? The easier way or the hard way. This game is about avoiding getting caught heavy-handed in this. It's not about making the money on the way up. Every schmuck out there can make money on the way up. Ultimately, you surviving this game and being around in this game is going to come down to, can you avoid getting lumped up and giving it all back when this shows up? You're going to learn that one way or another. I told you that was the big thing for me in my career. And, people get frustrated by all sorts of things in this game. My pet peeve, the thing that drove me nuts, was I would catch a low. I'd be ready at a low, and I'd make money on the way up and get all excited about the money I made on the way up. And one little correction wiped it all out. Just that. Just like that. all the money I made, that whole entire rally, right? I got caught and gave it all back and then some. So you're gonna acknowledge that point no matter what. However long you're in the game, you're gonna realize like that ultimately is gonna determine whether you find success and can hang around in this game. More than anything else, the trading part of this game. All right? The trading part of this game. So whatever you got to do, whatever it is you got to do to avoid, it doesn't matter you get caught some way. You can't, there are going to be times you get caught with something. You're not going to be in all cash when this shows up. Okay? But the game is to not give back everything you made and to hold on to a nice chunk of what you made when this shows up. Plain and simple. Okay? So, and like you've been in, all you guys have been around long enough to see, right? When the turn comes, the real turn comes, you don't have to be here sitting with a bucket waiting and nail the lows to make money, right? Even if you miss this initial rip, okay, and you're playing names, the beauty about these rallies are it doesn't end there, right? Maybe certain things get overextended there. There are other names that participate. But you get caught in this, right? You get caught up here holding, like we're talking about, right? Think about it, okay? If you're holding a basket of calls up here, okay? I don't care how much money you made. If you're holding a basket of positions up here, normal size positions, and you get caught in this, all right, and this pulls one of these things, I don't care how much time you have, 3 months, 5 months, 6 months, you're taking a big hickey. A big hickey. There's no surviving that, you know? Frustration alone drives you nuts. And the sad thing is, right? That's what happens to retail, right? That's what happens to retail all the time. It's not that retail doesn't make money in bull markets, right? It's not like retail doesn't make money when the market's going up. They're making money. The difference is they play small here, they play a little larger here, right? They buy the dip, they size up a little bit more. Oh, I caught that dip nice. I got a new system here. Oh, I caught that dip even nicer. Had even more positions on. I caught this dip all in, even better. And then here, they catch that dip. They catch that dip, Stavro Greek style. They catch that dip, right? So now, here is where size-wise they were their smallest, the lightest, because they didn't have much conviction. And here, because they caught a few dips, this is where they had the most conviction and the most weight, and they're buried. Right? And look at the names, okay? This is what? Borderline even 10% that we got to? And meanwhile, if you're buying highs in this stuff, or this stuff, or how about the famous Aklo? People were busting my chops about at $50, right? You have a basket of this stuff up here, you're mangled. You're mangled. So that's what it all comes down to, man. That's what it all comes down to. And once you start looking at the market through that lens, Again, it just being patient and stuff, it just makes more sense. But, it's not sexy. It doesn't sell, right? Nobody wants to hear when the market's going, still grinding new highs. Nobody wants to hear, Jay's talking about no new sweeper activity again and be careful chasing overextended names. Give me a break already, will you? How long is he going to be saying that? Nobody wants to hear that. All right, because they're not thinking about this part. They're thinking about, if this continues here, I can make a little more money. Yep. Yeah, that's the truth, Tobias. That's the truth. But I'm dead serious too, guys. I'm dead serious about this, And if the beauty about trading your own account is you can be patient and disciplined. Now if you are relying on an income from trading, like I see many of the riffraff out there doing because the market's bullish, you're going to have a rude awakening because you're not going to be in a runaway bull market forever. I mean, that's just facts. It's not the norm to not have corrections in bullish time. This is the norm. This is normal. Not having a correction since 2023, that's an overshoot. Yeah, T. Yeah. And, again, another thing I see a lot of people do, and don't get me wrong, I get it. I understand, especially when you're trading around people, but if you feel the pressure, you don't have to tell everybody everything you're doing. You understand? You don't have to be so outspoken about what you're doing, to get trolled by others. Or why aren't you buying this? I like that. You don't have to answer to anyone. You don't have to prove anything to anyone, right? It's all about just making money. You don't need approval from anybody. You shouldn't care what anybody says or thinks or feels different. The reason I say that is I see a lot of people, who you don't know, maybe they feel pressured, to say they're still buying something or still holding on to something or didn't get stopped out yet because they talked with so much conviction about buying it. You got to take advantage of the perks of trading your own money. And the biggest advantage is you don't answer to anybody but yourself. Yeah, T. I mean, you're like me too, we got superstition too. That's a whole other can of worms, though. We're superstitious on top of it. That's is coming. Jesus is coming. I'm ready. Are you ready? I am ready. So that's the story, guys. All right, that's the story. I mean, those of you in the steam room, I think again we talk about it all day long. For those of you not on the broadcast, I try to do, especially in these times, do less talking and more typing. So those of you following the commentary, if you're not on the broadcast, right? Because I learned that the hard way early on that not everybody's on the broadcast. So if I'm not writing what I'm saying, people may not hear it. I'm talking about if I'm sensing something in the flow or spreads or anything like that. But for those of you in the steam room, if you're looking kind of for a lower risk approach to trying to catch some sort of snapback rally, again, we're set up for it. There's no doubt we're set up for it. We just need one of those. We need a confirmation catalyst from somewhere. From somewhere. Sweepers, spreads, Trump, the Fed, something that tilts it here. You know? And then at that point, I think it's well worth trying to take a stab in catching, again, nothing crazy, but trying to catch a snapback move. You know? So we're definitely set up for that. But again, bigger picture, we want, like we were discussing, we want to keep our eyes peeled for some of those other clues. And again, we don't know when they may show up exactly, but the earlier we pick up on it, the better off we are, you know? Ranchero will take care of him. Ranchero will unleash on him. Ranchero, like, he's not afraid. He'll scold you. He's not shy. He's not shy. All right, so that's the story, guys. And then hopefully, you know, fingers crossed. I'm not holding my breath because, again, we've been talking about it for a while. But once we start seeing some buying show up in names, you know, we spend the majority of this webinar talking about that. All right, because that's where the fun is. Fun's at. That's where the money's at, and everything else. Yeah, good point. Like you got the debt ceiling, you got all sorts of things going on. That's what I'm saying. We don't really know what this market is trying to price in. You know, whether it's tariffs, whether it's, we don't really know. Could be a mixture of it all. But eventually we'll get clues of what it may look like as we come out of this mess. All right. But first things first, like I said, I think, especially on an intraday basis, I think that's where we want to put our focus is trying to catch that snapback squeeze. I think playing the downside is a lot more dangerous here. That's what I'm getting at, right? Like the majority have picked up the money on the short side, no doubt. But here, I think the way we're set up here, it's a lot more dangerous on the short side, and risk reward wise, we want to keep our eyes peeled for a potential turn. He will make him cry. He will make him cry. All right, guys? All right, everybody. As always, I appreciate you guys stopping by, talking some shop. I'll see you Steam Room members mañana. And the rest of you, enjoy the rest of the week and have a good weekend. I'll see you guys next week. Later, everybody.